Hello everyone, welcome to elliottwaveforecast.com YouTube channel. Today is January the 5th and we are looking at the chart of the Nasdaq 60 minutes time frame here for the chart of the day. Okay, so you can see from this 1 hour chart, we ended with 3. This is the primary degree here at 17165.9, and that means we are now doing a wave 4 pullback, right? Within the wave 4, it subdivides into 3 swing because it's corrective wave 4, and it subdivides into a zigzag. So you get this 5 ways down, which should finish with A of that zigzag, and then after that you should get a 3-ways rally for your B of the zigzag before another leg down C wave, and then once we finish A, B, C in the blue degree here, intermediate degree, then we will finish with 4 in the primary degree, and then from that point we will rally higher again, because remember, even though we are calling for another leg down, that doesn't mean this is a bearish market. Just by the count you will know that this is actually a bullish market, because the peak is a wave 3, so eventually at some point it's gonna break above 17,165. Now let's talk about a couple of things, understand the alternates, and also understand the possibilities here, because people that just learn Elliott Wave, they think that this is just, you know, like if you're forecasting something, it has to happen exactly swing by swing, exactly, you know, what you're forecasting. But that's not really the right way to look at it. The right way to look at it is to understand the bigger picture and what the real trend is. And then understanding in the shorter cycle, there are a couple of different possibilities in terms of the path, and then also understand which direction, which side we should be on. Okay, so if I zoom out to the weekly time frame, now this explanation is kind of similar to the Dow. I did the Dow, I think 2 days ago, right? So I'm gonna switch to the weekly time frame. So I'm gonna put this wave 3 over here into the weekly time frame, which is this one, right? So now we are doing a wave 4, as you can see in the 1 hour, and it's still in progress as an EPC, and another leg down to finish A, rally B, and then C leg down, right? So something like this, another leg down to finish A, B, and a C, right? That should finish with 4. And then after that, we should be looking for another leg higher again, right, to finish with 5. So if this is a 3 and a 4, this will be a 1 and a 2, right? Couple of observation, and I'm gonna explain to you guys several more information, because I was looking at the comment 2 days ago about the Dow, and I see people saying, well, you are not really following Elliott Wave rule because you are forecasting with 3 to be short and doesn't reach 1.618. Now, first of all, the rule doesn't say wave 3 must be going to 1.618. The rule only says wave 3 cannot be in the shortest wave. Now, as I explained to you, if you remember, if you watch that chart of the day on the Dow, right, I mentioned that there are a couple of different possibilities, right? Now, first of all, you notice Nasdaq, just like the Dow, also broke to new all-time high. So nothing breaks to new all-time high unless it is bullish, right? You cannot have a bearish market that breaks to new all-time high. That doesn't make any sense. So in a bullish market, that means the move up has to be impulsive, because you cannot have a corrective move that breaks to new high. So in an impulsive move that breaks to new high, you need to finish, any kind of impulsive move has to finish in 5 ways, right? Now so far we only have 3 ways up from, if you look at it from the last significant low, which is this October 2022, you only got the 3 ways up here, right? So that tells you this is not ending by any means, right? This is not the end of the rally. And even if you are somehow bearish, and I don't know why someone would be bearish, since 2008 it keeps making new high, then that means we need to at least see one more leg higher, right? At least see one more leg higher before it has a potential due to a larger degree pullback again, because again it must end in a 5 waves in an impulsive market, right? In a bullish market. So we can say that the right side still is bullish without any doubt, right? Still bullish. Now, having said that, let's take a look at a couple of possibilities. One possibility is this, what we are showing here, 1 2 3 4 5. Another possibility is going to be a nest, 1 2 1 2, which is a more bullish interpretation, right? If this is a 1 2 1 2, so what that means then is that once we finish with the 2, right, we will rally in a 3 of 3, which is going to be an explosive move, a 3 of 3 like this, right? So it's going to be a nest like this, 3 of 3, 4 of 3, 5 of 3, before finishing the wave 3, and it will continue to go higher as a result, right? So we can do something like this as an alternate, right? And then finally, the last alternate, which I don't favor, is the same as I explained in the Dow 2 days ago, is the idea that we can get a expanded flat from the peak here, from the previous week, either expanded flat or a running flat. Now the difference is the expanded flat, you have a marginal break above the previous peak, but then it fails and do a massive 5 ways down like this, and then that 5 ways down is going to break below the last low. That's called expanded flat. In a running flat, you have a marginal break above the previous peak, but the pullback is not gonna break below the low. So it's gonna be a 5 ways down, but then it's gonna hold above it like this. So similar to like something like this, and then rally higher. So this is not something that I favor, even though it is always gonna be a possibility no matter what. And the reason is because it breaks to new high, right? We don't, in the EWF, unless we have a very strong reason, we never ever call a flat against an obvious direction of the trend, right? Again, like I always explain all the time, a flat is only for those people that do not really trade, in my opinion, because when you have a high, lower, low, you know the trend most likely 90%, 80%, 90% has already resumed to that direction. And then if you still say, no, I don't believe the trend has resumed, I need to be right, and therefore it must be a flat, and therefore your probability is very low, and it's kind of, we lose credibility, guys, if we don't want to change our view. I mean, wrong forecast is very common, right? We are traders. We are not like a forecaster has to be right 100%. Traders always win and lose. It's very common and it's very usual. It's all about the risk management, right? If we trade long enough, we understand everything is all about risk management. Everything is about position sizing, having a good system to know when to trade, where to put stop loss, and manage position size. That is what is important. It's not about the forecast has to be correct, has to be bullish, has to be bearish. No, it's not like that, guys, right? Now, again, the last alternate is doing a flat, which is not my favorite count. All right, so then we end up with two possible count, either 1 2 3 4 5 diagonal, and then or 1 2 1 2. Now I'm going to address the next question, which is why I would call it this way. That it does look ugly, right? If you think about it, yeah, somehow it looks ugly, and the 3 is very short, and then you got a 4 like this, and it could be diagonal because the 4 may overlap with the 1, and then it goes higher again. And then you might say, why would I call something like this? Isn't it looking pretty ugly? Isn't it better to call it 1 2 1 2, for example, right? Now there is a reason. Remember, we are calling everything not because we just on the whim calling it like this, but because we look at the entire market and we tried our best to find what is sort of the best path at a given time. We could be wrong, but we have a reason why we call a certain thing. Like for example, we are calling it this way. Why would we call it this way? Why don't we call it 1 2 1 2? Right? And the reason is because correlation, guys. So for example, if you take a look at another US indices called the Russell. Now again, remember guys, we do this for a living. So people that try to argue with us and so on, that's fine. All right. So as long as you understand, we do this for a living. So we kind of live and breathe the market, and we analyze every single one of them every single day. So it's not like we are something that is just doing a YouTube amateur guy doing YouTube that is like for entertainment, right? So you can see this Russell here. Now the Russell is very interesting. Unlike the other indices, you can see from this previous all-time high, it actually made a new low here, guys. So in other words, you got a low here, you got a correction, right? You get a correction, and then it made a new marginal low. So what does that tell us? It is a sequence of lower low. A lower low sequence technically is a flag. It's a flag telling you it can see another leg down. Typically, when you get a lower low like this, typically in the third leg will go to 100% extension. Typically, right? Like this. Let me explain to you first. If it does make a lower low like this, typically you're gonna be looking for the downside into the 100%. But in this case, it sort of didn't extend lower, but instead it rallies higher and break above the peak, right? Now, you look at the momentum, you can still see clearly that we got a divergence, right? Divergence. So the price makes a lower low, the momentum makes a higher low. That's a divergence, right? Now, what does that tell us? You got a price action that makes a marginal low below the previous low, right? And you got a divergence, but it did not have a continuation lower. Instead, it reversed to the upside. This is a possible sign of a flat, expanded flat. So again, we are not gonna call expanded flat when we saw a break below the low, but in this case, it does happen. It rallies and break above the previous peak. So in other words, think about it. Okay, if you want to call this, let's say with A, for example, right? Let's say with A. So then let's just pick a degree. Let's call it a primary degree, like in this way, right? So then that means this could be, because you got a divergence and you got a lower low, it is possible that you have something like this. This is your A, this is your B, and then a potential sort of idea that this could be your C of B as an expanded flat, and then it goes down like this. Or if we're going to extend higher a little bit more, then this could be like this. 5 ways up, and this is only one of C. Right? It could be one of C like this. Now, what is this index telling us here? This is telling us that if this divergence and this marginal low is going to be giving us a warning sign, what this is telling us is that the Russell should not be that bullish, or in other words, it should not break above this previous all-time high yet, November 2021, and then it needs to resolve by eventually breaking the low again, either from here or from here. Now, if that's the case, going back to the Nasdaq again, then the Nasdaq cannot be that bullish, guys, or the Dow, whatever it is, because eventually if the Russell needs to do this, so then if I look at the Nasdaq, right, if I look at the Nasdaq and I start looking for a super nest like this, a super nest, then it looks to me it is looking too bullish, right? Unless from the timing perspective, this short pullback is equivalent to the Russell big pullback, which I don't think they are similar, right? If you look at the Russell, this move down over here is a big move here, and it is not the same as the move down here, right? So if the Russell do something like that, a big pullback like that, then I think the Nasdaq has a potential to do not just this kind of pullback. It will pull back, a bigger pullback that will correct this entire rally. And that's the reason we are not that super bullish yet, and we're calling it this way in the Dow, in the Nasdaq, and so on. I'm just explaining the reasoning here, guys. All right. So now I will not explain every single time what the reason is, because that's basically, if you are a member, then you will know what our view is. But there is a reason for everything that we call. All right. So for now, that's what we are calling. Again, the other option is a nest, and then the other option is doing a flat from here, either a running flat, which is like this, or an expanded flat, right? Which is not the favorite count. A running flat is like this, and then higher like this. Now, running flat, for example, it still might happen. I don't deny it might happen. Running flat, for example, might happen. Let's say if the Russell breaks down from here. So if the Russell is actually ending C of B and starts to go down in a select, then I think there's a possibility we really will do a flat in the Nasdaq, right? And the Nasdaq might actually be doing a bigger 5 ways down, and the Dow and the ES and everything else, right? It might do a bigger pullback like this, and it can do a flat from here, either as an expand. I don't think it's expanded, it's too big. If it is going to be doing a flat, I would think it is going to be doing some sort of running flat, which you can see a 5 ways down is a pretty bigger pull. It's a pretty big pullback, but most likely I think it's not going to break below here and then rally again. Okay, so that's the update here, guys. As always, if you want to get more updates in the indices, stock, forex, commodities, and so on, feel free to check our service. We have 14 days trial, and the link is in the description of the video. So see you all again next time, and have a nice day, everyone.